this bearish breaker, this fair value gap. We also have this volume imbalance right here that we touched. And here, important. After we take out this sell side below this low, I prefer it not coming back to the bearish breaker and just drop lower after we take out the sell side. Yeah. Dollar rallying for the bullish objective. Let's just sell one contract. It touches it again. Just one. Stop loss will be above the bearish breaker. I think it won't touch him again. We're doing this to study. I like to go in with a market order. I suspect if it will provide me with an entry. I don't think it will, but we'll see. There's a good question right in the chat. How did you anticipate it will come into the breaker? I actually am not sure about the question. Can you rephrase it? Uh, are you asking how did I anticipate it will go below the breaker, or how did I anticipate it will touch the breaker right here? Can you please rephrase it? Now, since it has taken sell side, I'm not comfortable, you know, going short with this breaker. Nasdaq is just wanting to dip low. Now, since Nasdaq has taken out its weekly buy side liquidity objective, it's free to move lower. It's like it's opened up now. It can move lower. While the past few weeks, I think days, let's say, the past few days, Nasdaq was not willing to move lower along while ES was. Now, since it has taken buy side liquidity above the weekly high in the continuous chart, continuous contracts chart, it's opened up now. It can go for sell sides now, sell side liquidities now. The candles for me is going up, but you said it will come into the breaker. What was the logic? Okay, so you're talking about how did I anticipate? I think you were anticipating that breaker that I'm calling a breaker. You were anticipating it to be a bullish order block since the candles were going up. It was making higher highs, I think. Yes. How did I anticipate that to be a bearish breaker? How did I anticipate that we were going to go beneath them, beneath that? So the logic was something that it's related to something that you asked me earlier. Why Dixie? Why we analyze the dollar index? This is why we analyze the dollar index because the bias on dollar was bullish. And since it was bullish, I'm only looking for bearish prices in equities, in ES, in NQ. So if I'm looking for bearishness in equities, I will look for bearish premium arrays, anticipating them before they are forming. This candle right here, you are right. It should have been a bullish order block. It found support here. If you can see my cursor here, it found support here. Yes, but did it move higher? No. And how did we know it will not move higher? Because of the dollar index. That's why dollar index is very important. Even if you can't trade it, it's the first thing that I look in the morning. When I look at the charts, actually it's evening here. I live in Mumbai, but when I look at the charts, the first thing that I look for is dollar index. I analyze the dollar index first. I hope that answers your question. You're welcome. Now, even if it comes up into the bearish breaker right here, since it has taken sell side out, since it's not as much willing to go lower as Nasdaq is. I'm not, you know, I don't think the bearish breaker is a right way is is applicable anymore. I may be wrong. It can still go lower because our bias is bearish because we are looking at it with a bearish bias because we have analyzed the higher time frames. It can still go lower, but I don't think we are going to to be a part of this trade. And I'm happy to let it go. I'm not if you can hear my voice, if you can sense my emotions, I'm not at all, excited or anxious or anything. I'm just watching, I'm just laid back, relaxing. The most important thing is for you to read price efficiently. That's what we're doing right here. And this is what I plan to do with my private sessions because this is the most important one. The trades that you see in my Twitter recordings, they are fast forwarded. So it looks like, wow, it's just 2 minutes. But all of these things that I talked about here, all of these supposedly, in inverted commas, boring things, these things are the backbone of those recordings. Without these things, without these boring stuff, without this analyzing price, without this, watching, sitting for hours, waiting, they won't happen. I still favor the sell side, but I think I won't get to be a part of the trade. And I'm okay with it. One more thing that I would like to put your focus on is see the logic, the algorithmic delivery here. We have the sell side liquidity objective here. We move down. As I outlined here, we just rammed down here. We rammed down into the sell side and reversed. Why did it do that? Anyone who had a stop loss here, it was taken. That's fine. That's logical. Okay, that we understand. Now, if you want to, I don't want this high to be taken out now. I don't want this high. I want it to move lower. I want it to move into the sell side liquidity here. What I'm trying to say is the stop losses were taken, and also below this low here, we have breakout retail sellers. So if there are breakout retail sellers here, where will they put their stop loss? They'll put above this high, or maybe this bodies. So to trap those retail breakout sellers, they are right. They are actually right in their market direction. They are anticipating it to move lower. But the strategy that they use, the breakout strategy, I'm not a big fan of it. There's nothing wrong actually with the breakout strategy. I actually enter with a market order whenever I think the market's going to go a certain direction. I don't usually use the PD arrays to enter. I am actually quite impulsive in that matter. But you have to have the direction right. You have to have the narrative right. See how symmetrically Nasdaq is moving. Very much Nasdaq. If you have any questions, you can ask me in the chat. I'll try to answer. I'll just unmute you for some time. You can ask me with your voices.
Hello, Z.
Yeah, I can hear you.
Okay.
Do you have any questions?
No, I've got no questions. I've just been watching. I just do. If price came back up to that bullish breaker on ES, would you take a trade?
No.
No.
This one, right? That we
Yeah.
outlined? No, I'm actually not comfortable taking that trade.
Okay.
Even though I think it will still work. But that's a good 2022 model right there, actually.
Mm-hmm.
You can take that trade. But it actually will not satisfy the itch in me. So I won't take that.
Okay.
Let's see. Let's see. Actually,
Okay.
it depends on the market conditions. It changes every minute. So we'll see. If I see something, I'll say it out loud. Any more questions? Now, if you ask me what what you said, if price came back in that bearish breaker, that's actually a very good trade to take. That's a good 2022 model right there. We have big fair value gap here. You can. Let's just go in with one contract. That's good. But I don't want you to expect anything from this trade. Just be nimble. Just be emotionless with it. Even if it turns out to be a loser, just like, okay, because we are following everything. We're following every higher time frame analysis, everything that we should follow, we are doing it. And that's a good model right here. I would look to enter with this volume imbalance, preferably, not preferably, the first, because the first thing that comes in the way. You can also use the bearish breaker. You'll see. There, there. I like that. I like how we made a wick there. That's what I was expecting. From 41.22 to 41. Seventeen, let's say. Let me just use this here. Outside here. If you ask me, where is my stop loss? It's above the high of the bearish breaker. This would have been an aggressive stop loss. This is a little conservative one that I'm using. What is my risk management? My risk is 0.5% of my account size. And why is it 0.5 and why is it not 1%? Because my last, actually like the day before my last trade, I actually forgot the date, but my last trade was just better than break even. If you remember, the yesterday I traded the power hour, the last hour of trading day, and I got better than break even. Let's just see what I did there. The one trade was break even and the other was just better than break even. But this trade, it was a 1% loss. It was traded in the this date and last hour. It was 1% loss. So when I take a full stop loss, yes, Daniel, it's staying below the consequent encroachment of the big wick. Yes, correct. But if you ask me, it can still go higher above that wick and still acceptable to me. But that's a good start. The consequent encroachment of this wick is a premium array now that will look if price resists, but it's not the it's one premium array, correct. The second one I'm looking for is this bearish breaker here. I'm not looking for price to go above it. This should defend price. The third one is this volume imbalance and this CB here. It's okay if we go up till here, but if we go above actually this level, this the body of this bearish breaker, if we go above it, that is troublesome. I will take a partial with 5 handles, one contract. And this question may arise, what if I lose this trade? You know, what will I do? Nothing. It's okay. You will lose trades. And in for a question about risk management, I will the next trade we'll use half the risk. We will have to trade the mini in my I think so, but we will use half the risk. And what is half the risk? We'll use today we are risking this trade we are risking 500 around $500 here. So the next trade we will risk $250. And what if we lose that one? We use half the risk again. Half. You lose, you take a full stop loss, you cut your risk to half. And you know what's the benefit of that? You will never blow your account. You will never blow your account if you follow that. 1%, 0.5%, 0.25%, 0.125%, then half, then half, then half. I don't think you will lose more than 2 or 2.5% of your total account. And when you win a trade, suppose I win this trade, then I'll go back to my original risk percentage, that is 1%. And I'll stay there until I take a full stop loss again. Then I'll cut my risk to half. Simple. Now, since you asked that question, that it's respect when it was here, you said it's respecting the consequent encroachment of this wick here. That was correct. It was one premium array that it respected, but don't rush your stop loss there. If I had rushed my stop loss there, I would have been taken out. Look for at least 3 arrays, and conservatively, we use all of those 3 arrays like I did here. I use 3 arrays and I place my stop loss with it, considering it. NASDAQ was wild. If you look at NASDAQ, I'm not going to change my screen now, but if you look at NASDAQ 1 minute chart, there was no bearish breaker, in my opinion, there. So price came up total into the fair value gap on the 1048 candle. It will retrace deep into the fair value gap now. In my opinion, this fair value gap, it will retrace deep into it. Because Nasdaq's going for buy side. Preferably, I don't want the mean threshold of this bearish breaker to be violated by a body of a candle. That's what I would not like to see. If I had more risk for myself to enter, if I had more risk to enter, if, then I would enter with every high. First entry, second, third, because it is still valid. Also, I'm only showing you the 1 minute chart here, but you should also monitor the higher time frame charts along with it. I have them right beside me on my next monitor. You should always, you know, keep looking at them, not strain your eyes with them, but refer them, because you will get lost if you're looking at the 1 minute chart for too long. It may look like a market structure shift to you right here, but the higher time frames are key. The mean threshold of the fair value gap. Are you talking about the consequent encroachment of this fair value gap?